Before I get started, I'd like to just say a little bit about my background. I'm the president of Comprehensive Wealth Management. I'm also the president of a certified public accounting firm in New York that specializes in working with dentists. We do work with dental practices across the country. I'm a certified financial planner, have a master's degree in taxation. I am securities licensed, insurance licensed, pretty much anything financial related. I am qualified and uniquely positioned to work with you in those areas. So this chapter deals with managing your investments. So take a second to read that famous quote. So many people are very fearful of investing in the stock market. And one of the best things about the stock market is that it gives you an opportunity to make a lot of money. And perhaps one of the most attractive things to many people is that the stock market, bond market, it's very liquid. Literally, all you have to do is hit a button and you could buy and sell something. Well, that quick liquidity is a blessing, but it's a curse at the same time. And the reason I say that is because the number one reason people do not do well when it comes to investing, especially when they invest on their own, it's simply because everyone shares one common characteristic, and that characteristic is human emotion. We're very emotional beings. Now, if I told you today that Macy's was going to run a 50% off sale, some of you might stop this lecture, run out there right now and pick some stuff up real cheap, right? If on the other hand, I told you today and today only, Macy's is charging twice the price on all their items, none of you would go out there and buy it, right? You'd wait until the price went down. But when it comes to the stock market and human nature, we tend to do just the opposite. And what I mean by that is when you hear about everyone making money and you see a particular asset class that did very, very well last year, people tend to want to jump in and start investing at that point because they want to jump in and make some extra money if they could. And the opposite, unfortunately, is true when the stock market crashes and the market's very low and selling at 10%, 20%, 30% discount. A lot of people get very emotional and say, you know what, I don't trust this thing. I don't understand it. It just doesn't feel good to me. I don't like the pain. I can't take it anymore. And they sell low. So perhaps the biggest thing I've heard, especially from older, retired dentists is, you know what, John, I've been investing my whole life for 30, 40 years, never made any money. Well, the reason they never made any money was because of human emotions. So the stock market is like a roller coaster, right? So if you buy high and the market goes down and you sell low, and then you repeat that cycle every 7 or 10 years, guess what? By the time you get through that roller coaster, you're going to end up absolutely nowhere, right? You're going to end up right where you started if you're lucky. So my simple thing to tell you here is we need to find an asset allocation model that fits you and your personality, because some people are okay with large fluctuations. Other people want to go on a ride that's not quite the cyclone in Brooklyn, right? Something that's a little tamer. So you need to speak to your investment advisor. They need to strategize what the appropriate investment model is for you, and whether we're talking about investing in stocks, bonds, mutual funds, ETFs, or real estate, that is a subject you really need to get the advice of an expert. Now, in chapter 9 of my book, I focus on managing your investments. I would encourage each of you to read through that chapter. I'm not asking you to become investment experts, but you need to learn the terminology. What's a stock? What's a bond? What's an ETF? You need to know that stuff. But also in that chapter, I go through my strategies, the specific strategies I use to help manage people's money and allow them to stay the course, no matter how good or bad the market is. The trick is you got to be in it for the long run, because historically, the market has always done extremely well. In almost every 10-year period in history, the stock market has averaged over 10% return or better. Have there been periods where it's been lower? Yes. But historically speaking, it's always been one of the best places to invest. As I said, I am the writer of this book. It's a second edition. It's loaded with wealth of information. I would encourage each of you to pick up a copy of this book. And if you have any other questions, I left up on the screen here my contact information. It was my pleasure speaking to you guys today. I'm hopeful that you found at least one or two things that you're going to put into place immediately in your own life that will make a big difference in your life. With that said, thank you for coming, and look forward to speaking to each of you again soon.